Today I would like to analyze Reddit, one of the largest social forum companies in the world and one of the best performing stocks in the last year. We are up around 115%, but from the all-time high in 2025, the stock price is down around 30%. So we're going to take a look at the financials to find out if it's still a good buy right now. The first thing we can recognize is a market cap of 28.97 billion US dollar. This makes Reddit the 37th largest internet company in the world by the market cap. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, the revenue was around 0.23 billion US dollar. And then in 2021, we saw the incredible growth around 111%. In 2022, we saw the very good growth around 37%. In 2023, we saw the good growth around 20%. And in 2024, we saw the incredible growth again around 61%. So overall, in the last 5 years, we had a very good revenue growth, so it's a check here. The next thing we're looking for is free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 0.06 billion US dollar in the negative. In 2021, it was even worse with a negative around 0.13 billion US dollar. In 2022, we saw the small improvement with a negative free cash flow around 0.1 billion US dollar. In 2023, it was negative around 0.08 billion US dollar. And then finally in 2024, we saw the positive free cash flow around 0.22 billion. So that's a very good growth, I would say. So it's also a check here in the free cash flow growth. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So we're going to take the free cash flow from 2024, 0.22 billion US dollar. We're going to divide it with the current market cap, 28.97 billion. And then we're going to get a free cash flow yield of around 0.75%. And that's actually quite low. It could be an indication for overvaluation. It's under the 4% that we are looking for, so it's not a check here. But we can also assume that the free cash flow could grow in the future as well. So we can see here, ChatGPT says in 2025, the free cash flow could be around 0.56 billion US dollar. In 2026, around 0.73 billion US dollar. And in 2027, around 0.98 billion US dollar. So let's assume for 2027, around 0.75 billion. So let me know in the comment section if you think this number is realistic. Then we're going to divide it with the current market cap, 28.97 billion US dollar. And then we're going to get the free cash flow yield for 2027 with our free cash flow assumptions. And this is around 2.58%. And this looks already better, I would say. It's still under the 4% that we're looking for. So this wouldn't be a check here, but overall, I think it's not too bad. The next thing we're looking for is the debt to free cash flow ratio under 5. This means the company can repay the debt with the free cash flow in under 5 years. So this is a very important number because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. We can see here around 20 million US dollar. Then we're also going to take a look at the short-term debt, around 6 million US dollar. And then we're going to divide this number with the current free cash flow. So this is around 220 million. And then we're going to get the ratio that we're looking for. So the number we're going to get would be around 0.11. And that's a very good number actually. It's under the 5 that we're looking for. So it not takes many months to repay the debt with the free cash flow. So the check here, we like to see that. We can also take a look at the cash on hand, how much money this company has in the bank. And we can see here cash and short-term investments around 1.84 billion US dollar. And that's a very huge amount. So overall, this company has a great balance sheet and we like to see that. The next thing we're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. First, we're going to calculate the enterprise valuation. So this is the current market cap, 28,970 million US dollar. We're going to add the debt as well, 26 million. We're going to take minus the cash. So this is around 1,840 million. And then we're going to get the enterprise valuation, how much the whole company is worth. So the number we're going to get would be around 27,156 million US dollar. So now we're going to divide this number with the current free cash flow, 220 million. And then we're going to get the ratio that we're looking for. And that's very high, actually around 123.43. So of course, that's over the 25 that we're looking for. It's not a check here, but we can also calculate this number with the future free cash flow assumptions. So then we're going to take the free cash flow of 0.75 billion US dollar. So let's see what we're going to get then. So the number we're going to get for 2027 would be around 36.20. And that looks already better. It's still not under the 25, so it wouldn't be a check here. And I think overall, this company does look slightly overvalued right now. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that, especially if we think the company is undervalued. So we're going to take a look, and we can see here the shares outstanding increased over the last 3 years. And that's actually quite normal for the younger companies because they need a lot of financials to invest in the future. So they put more shares on the stock market. So it's not a check here, but it's not necessarily a bad thing. Can Reddit stock be a good buy right now? One of the best performing stocks in the last year. We are up around 115%. So let's start with a positive about this company. They had a great revenue growth in the last 5 years, sometimes even over 50%. They also had a very good free cash flow growth as well. This is something very important as well. And the balance sheet is also looking great with a low amount of debt and a good amount of cash on hand. The free cash flow yield around 0.75 is quite low. We want to see that number over 4%. But in 2027, with our free cash flow assumptions, this number looks already better with around 2.58%. Then the enterprise valuation to free cash flow ratio is also quite high with around 123. We want to see that number under 25. So in 2027, with our free cash flow assumptions, this number could be around 36.20, which would be an improvement as well. So overall, I think it's an interesting company. They have a lot of positive financials, but maybe the valuation is a little bit too high right now. So I think if the stock price goes down to $100 again, I think it could be a good buy. If you found this video helpful, don't forget to like and comment and subscribe for more content.